Hello and welcome to another update about WTI light crude oil futures from an Elliott wave point of view. Overall very consistent. The outlook is still very consistent with previous updates. You might remember from the last update, it's already been a few weeks because really we haven't really had any changes here. And this is really, or it was really a boring sideways range. There is now a realistic chance that we see a breakout to the upside. I'm inclined to give the bulls here the benefit of the doubt. That was also the expected breakout range to the upside. Yeah, it is the preferred interpretation at the moment that the price will continue the move up, even though there is, of course, a more bearish alternative available. But for now, I'm tracking higher prices. And this is going to be the case as long as the market does not break and sustain below $68. So current idea is that we are moving up in a B wave corrective rally. The A wave bottomed down here around May lows, 1st of May, 3rd of May, 2023 around $53. Then we saw a rally in what would be wave A of that B wave. The B wave was just a horrible sideways correction for, when did it start? More than a year. So that sideways correction is then wave B of B. And the B wave itself, and that's why it was so boring, unfolded as triangle. A, B, C, D, E. And what some of you might not know is that a triangle can complete with an E wave as a triangle. So the E wave in the triangle itself can be a triangle. Doesn't happen often, but I think we have an actual case of that here. Because we can say that, a triangle is an ABCDE pattern forming lower highs, higher lows. The D wave of the triangle likely topped in October, and then we had this E wave. And the E wave consists of an A, B, C, D, E itself. Going higher from here. You can call it something different. But that's sort of my view, especially because triangle breakouts are typically quite rapid, and it did that. And then the break above the B wave high, the internal B wave high here at around $69.70, confirmed that upside breakout. So we'll remove now here. 1 second. I think those are still the trend lines from the previous video, but yeah, we don't need them anymore. But yeah, market broke out. I see this here as a potential 1-2 setup, right? Of wave C. Let me change the wave degree. But yeah, the idea would be we're possibly dealing with a 1-2 setup. I have obviously started to draw the fibs from the lower low here, not from the end of the triangle. That is intentional. Normally we would need to start to draw the fibs from just the length of the wave 1, but I want to incorporate because the bottoming structure isn't very clear. So what if I'm wrong with the about the triangle? Maybe the B wave was not didn't finish here, but maybe it just finished here or even here. Okay, so to accommodate that, I want to give it a bit more space in the pullback, but I want to mention it because the way it should probably be measured is here, $69.60 to $74.50, but I rather want to have it like that. $68 to $73.70. So the idea is this is a corrective pullback now in a wave 2 correction of a larger wave C that could take us closer to $100 in the coming, months, in 2025. And if this is a wave 2, I consider this only the A wave at the moment of the wave 2. So it could be A wave. We're watching for a B wave bounce and a C wave down. But then we already get into micro counting, which isn't so useful when we talk about WTI, right? So this seems to be a pullback in an overall uptrend, and any break above the 79.50 level, which is the last swing high, should send it probably to $90. I would assume based on this wave structure, but for some clarity, we'd like to have a bit of a deeper wave 2. That's the update about oil. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in daily updates about the S&P 500 as well as regular updates about stocks, feel free to check out these stocks and S&P 500 service. You'll find the link in the description. Thanks a lot. Bye bye.